After repeatedly sounding the alarm about an AI bubble, he has now chosen to liquidate and exit. According to an SEC filing, on November 10th, Michael Burry, the real-life inspiration for The Big Short, officially dissolved his fund management company, Scion Asset Management. Back on October 27th, in a letter to investors, Burry announced the liquidation of the fund and the return of investor capital, citing disappointment with market valuations. From successfully predicting the subprime mortgage crisis in 2008 to his recent warnings about an AI bubble in 2025, Michael Burry has consistently positioned himself against the prevailing market euphoria. Let's now look back at his classic speech from back when he shorted the US subprime market.
So, seeing the economy on the verge of collapse, I did the logical thing. I sought to profit from it. Specifically, I set out to buy credit default swaps on subordinated tranches of subprime residential mortgage-backed securities. And that's where I lost my investors too. In fact, in doing so, I gained a new level of insight into how Wall Street really works. I called different Wall Street firms, banks with which I had prior relationships due to my trading of distressed debt. I tried to convince them to trade in this market with me. Initially, I found no takers. This was March of 2005. The whole effort was complicated because it was important to me that this security, this instrument that I'd like to use to short the market, would be standardized such that if I bought a credit default swap from one dealer counterparty, I could easily trade that credit default swap to another dealer counterparty. Bespoke, one-off contracts were full of contract and counterparty risk that I would not tolerate. Nevertheless, by May of 2005, standardized contracts were on the cusp of becoming reality. In May of 2005, May 19th of 2005, we agreed to our first trades shorting the subprime mortgage market with Deutsche Bank. We worked on these soon-to-be standardized contracts a bit, and in the first days of June 2005, the first trades that officially went through. We would ultimately use 9 different Wall Street dealer counterparties. To be clear, well, first I'd say Lehman and Bear I avoided for obvious reasons, even back then. Goldman Sachs featured very prominently early on. They were a very anxious crew. To be clear, these credit default swaps that I'm buying would rise in value as mortgages are written off and the value of these tranches fell.